Companies will issue trillions in debt. The Fed will buy it all. The Fed will effectively own all of these companies and the public will have no idea. The market is obsolete. A centrally planned financial system is not a good one. It's not a strong one. It will always be corrupted and will be used to crush the majority in favor of the few. You came here for the truth, so let me unveil that for you. The Federal Reserve's balance sheet has passed $7 trillion. I'm going to do another video about that specifically just to highlight what has happened. But in this video here, we're going to talk about the economy on so many different levels. I'm going to show you what's happening with the job situation. We're going to look at Georgia. I want to look at what's happening, of course, with the GDP if I can. There's so much in here. Not sure if I can cover it all in this video. Let's begin. Jobless claims total 2.4 million, still elevated levels, but a declining pace from previous weeks. So you don't need to worry because things are getting better. And the interesting part of all of this is that it simply highlights the kind of information that you get from the mainstream media. They try to paint a fun picture for you. They try to make sure that everything is a-okay so that when you see the news, you keep a smile on your face and you keep investing. But that shouldn't really be the case because we should see the data for what it is and understand the impact of this, not just today, not just tomorrow, but of course, as we move through the following weeks. What does this 2.4 million signify? Let's go into it. Initial claims since early March top 38 million. And you could see what's been happening here. You've been following along, I'm sure. We saw this huge spike and now we are watching these numbers go down. No, they are appending to the number. This is the way that they perceive it and this is the way that they put it out to you. Well, the numbers are going down. No, they're not. The amount of people unemployed is continuing to grow. But when they show it to you like this, it makes you think that it's getting better. Look, the people that are unemployed or filing for unemployment right here, do you think they were unemployed in the week before and probably the week before? Yes, absolutely. But because there's such a backlog, they're only appearing on the statistics now. This is how it is. We've seen these people that have been unemployed for a long period of time. Sure, maybe they got their 1,200 and they're waiting for that again to come through, but that's not going to pay their bills throughout this period, 7 weeks, going on 8 weeks. This is impossible. But of course, this is the way that they try to make it seem. Everything's going to be okay. These are getting their stimulus. Those are getting their stimulus. It doesn't matter. We're seeing it top to bottom. The issue here is that the economy itself was already ruined before. 2018 was the clear and obvious signal. May unemployment looks worse than expected, signaling another bad jobs report could be coming. State reopenings and government relief for small businesses were expected to help get some of the laid off workers off unemployment benefits and back to work. So far, the data does not show that's happening. The May employment report could show the loss of millions of jobs and possible revisions of April job losses of 20.5 million. Of course, any relevant data, I will cover it on here. Just make sure to tune in videos every single day. Continued claims, the highest on record. We can see that the weekly continued claims for the unemployment insurance, right here, I'm looking at it on May 9th's data, 25.1 million. All of the previous recessions, this chart goes back before 1970, they look like nothing in comparison. I've seen so many silly arguments. Look, regardless, what we are seeing is massive contraction on every single level. You cannot recover from that in a short period of time. You can't say the economy is going to roar back. You can't say that everything's going to be fixed because this has lasting impact. This right here is historic, and of course, we're going to be referencing this for decades to come. This just shows you the payrolls jobs created since 2010, and that was, let's say, about 22 million or so. Lost jobs in the last 9 weeks is looking like in a short period of time it's going to be double the amount. So this is just giving you an idea of how big this has been. Net, the states may be opening back up, but the labor market is still closed for millions across America, and the loss of the income and spending of those without jobs will be a considerable headwind for this economic recovery. I think that's obvious. This is stuff we've been talking about here on the channel, but you don't often hear about this in the mainstream media. They say they're going to flip the switch, everything's going to turn back on. We just got to wait a little bit, hang in there, everything's going to be okay. But of course, that's not the case. If millions of people do not have their job, how are they going to spend? There's only so much stimulus that the government's going to provide. They could extend that out further, which they probably will. They can increase the numbers a bit, but ultimately you got to pay back with your taxes. Increased taxation is coming. They break down the numbers in this paragraph here. If you are interested, I need to move on to this one. Georgia reopening has been a mixed bag, Atlanta Fed president. Some who are ready to get back to where they were pre-crisis and others who are still afraid to get out. And this is important because we can see this type of thing happening for a long period. It wouldn't surprise me if into next year people are concerned. Is there going to be another wave? I'm not sure. Well, I want to be extra cautious, so I'm not going to do that. I'm not going to go there. I'm not going to go to the restaurant, not going to go to the movie theater, not going to go to the concert, not getting on an airplane. You know how it works. Georgia's early move to start easing stay-at-home restrictions nearly a month ago has done little to stem the state's flood of unemployment claims, illustrating how hard it is to bring jobs back while consumers are still afraid to go outside. Weekly applications for jobless benefits have remained so elevated that Georgia now leads the country in terms of the proportion of its workforce applying for unemployment assistance, a staggering 40.3% of the state's workers, 2 out of every 5, has filed for unemployment insurance payments. That's massive. And it is the reason partly why we're seeing that huge push to get reopened. But as you can see at this point here, at least, the V-shaped recovery is still elusive. Illinois moves toward first test of Fed's lending lifeline. State is completing central bank's required notice of interest. We'll see what happens. Illinois may be one of the first and most high-profile governments to test the Fed's $500 billion lending lifeline for states and cities. This is one state that is in big trouble. It's a state that has a heavy burden of taxation on the people who are living there, particularly as an outsider. I can hear from these people, so many people all the time. The property taxes are absurd. I've heard some crazy numbers. Of course, it depends on where you live exactly. But what do you think is going to happen to all of this? It's just going to disappear? That the burden is going to somehow reduce? No, everything is going to go up. You're going to pay more in the end. All of these bailouts just push this further out into the future. And when you do that, you create this snowball effect. So you can push the snowball further, but it's collecting more as it goes down the hill. Bankrupt retailers had hopes for a rebound, and they're threatening more of their jobs. You can see what has been happening because of the retail bankruptcies that are piling up. It's going to have an impact not just on the companies, but the jobs as well. I've talked about this many times before. While retailers have typically used bankruptcies to close underperforming stores and emerge a stronger company, that plan might not work. Think about it. If you have these particular retailers, let's just take Sears for an example, they use the Chapter 11 bankruptcy. They can shut down a bunch of the stores that are not performing. They can liquidate their inventory. They fire a bunch of people. They reorganize. They restructure. They come back thinner. They have to take on, of course, a whole bunch of different things on the back end with their finances that change, debt coming from here, somebody bailing them out over there. And eventually the hope is that they can come back stronger. Usually it's just a matter of fact that they disappear, especially look at Sears. This is one that is quite obvious in the longer term. But so many different companies today, they're closed. They cannot reopen to then liquidate their inventory. They can't do anything. They're just sitting on their hands. So what's going to happen to all of these people? And right here, I've got some major news. Check this out. Delinquencies among borrowers for past due mortgages are soaring, a sign that Americans are struggling to pay their bills amid a wave of layoffs. I made a few posts about this just recently, and I think it's important to follow what's happening here because we can see how individuals respond to these situations, and we're still very early on. Mortgage delinquencies surged by 1.6 million in April. That is the largest single month jump in history. The data includes both homeowners past due on mortgage payments who aren't in forbearance, along with those in forbearance plans and who didn't make a mortgage payment in April. This is big, and I'll just give you the numbers here. At 6.45%, the national delinquency rate nearly doubled from 3% in March, the largest single month increase recorded, and nearly 3 times the prior record for a single month during the height of the financial crisis in late 2008. So when I hear people say this isn't 2008, it's never going to be that bad, and so on and so forth, look, a lot of the stats have surpassed what we saw. And I get it, Amazon stock has definitely rocketed higher. But you got to be realistic here. You have to look at the data you're being presented and be honest with yourself. This isn't good. Biggest US mall is 2 months delinquent on $1.4 billion loan. We're talking about the Mall of America not being able to pay their bills. This isn't some random person down the street. We're talking about the biggest US mall. This is an interesting article coming out of the Wall Street Journal. It's something that I have talked about numerous times. And essentially, when you have a crisis, there are always going to be an increased or accelerated level of mergers and acquisitions. The big boys get bigger, the small businesses evaporate. A lot of them go out of business, and you have some that are gobbled up by the bigger players. What happens when a big company takes on a little company? Just from my own experience, just from what I've read as well, time and time again, what they do is they often take the company, they split it up. We no longer need the back office. We don't need anybody from your HR department. We don't need that team or that team. We're going to use this one and that one. Everybody else is fired. So there are always jobs that are lost in these consolidations. At the same time, you have more and more power being concentrated. That's never a good thing. More competition is going to provide better pricing and hopefully better products and services. For the largest players, we certainly see this immediate period as a potential opportunity to make plays to aggregate capabilities by acquiring smaller businesses that may need liquidity. They give a few examples in here, but ultimately what they're trying to highlight is that the M&A activity has dropped off. What I want to note is that as soon as these companies believe that there's a little more certainty, that's when the mergers, the acquisitions tend to take place. You've got certain companies like Apple and others that are sitting on these massive piles of cash. They're just waiting. Take a look at this information directly from Market Economics, IHS Market Composite PMI and US GDP. I want you to focus on that green-blue line there. IHS Market Composite PMI had fallen down a record amount. It has since come back up in a little bit of a V-shaped recovery if you look at it. Fantastic. Well, regardless, the number appears to be around 36. And remember that 50, the line of 50 is in fact the floor or the ceiling in this case here, and anything below that line represents a contraction. It is so far down right now, and there are a lot of uncertainties, a lot of questions that still remain. But of course, I'm consistently updating you on this, and I wanted you to know how this has progressed. Directly from the World Trade Organization, WTO goods barometer flashes red as we see a disruption in world trade. This should come as an obvious note to so many people. I mean, if anybody's paying attention, you would know that this is in fact the case. Look at these statistics falling off a cliff. The blue line is the goods trade barometer, and the black is the world merchandise trade volume. This has really fallen off. If you see what's going on with shipping right now, it's unbelievable unbelievable. Freight is extremely slow. You've got problems in every sector just about, whether we're talking about the auto industry, manufacturing of all different types, different businesses and services, and everything ultimately is much worse today than it was just a couple months ago. They have provided maximum stimulus in order to boost this up, but I'm not sure they're providing the right solution to the problem. I'm going to end the video there. If you found it informative, please give me a thumbs up by clicking the one button on your screen, the little thumbs icon, upward or even downward if you want. You are helping to support this channel by increasing the engagement on the video. That's how you pump these videos higher up in the search rankings. Thank you very much. If you want to check me out on Twitter and Instagram, I'm doing stuff on there every single day at The Money GPS. If you want to understand how to sell stuff online, there are so many courses available to you. I just saw one that is $2,000, used to be $500, now increased to $2,000. And in my case here, I, for some strange reason, decided to make my course free. If you want to take advantage of this, the AmazonGPS.com. Do you want to understand the financial system from top to bottom? Well, these two books will do that just for you. You got to check them out at the link in the description. If you want the audiobook instead, themoneygps.com. Hang on a second, have you seen this video? It's extremely important. It's got a lot of data in there. Click on it, I'll see you there.